Good morning, everyone, and welcome to our webinar. This is Courtney, the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website, which does mean that all attendees will be automatically muted so that we can get a quality recording. If you do have any questions, go ahead and put them into the chat box, and we will try and answer them throughout the webinar. However, if we're running short on time, we'll have a member of our team reach out to you following the webinar either today or tomorrow. If you haven't already heard, we just unveiled a new agent resource here at AIM, the 2-Minute Minute. Our marketing team will be bringing you quick hit ways to talk about more prospects, write more business, and grow your agency. We know that most of our agents do a little bit of everything, so we'll make sure that we have something for everyone. And we'll get you what you need in just 2 minutes. We're posting new videos every Monday and Wednesday, so check out our Facebook, Instagram, LinkedIn, or YouTube pages to see what you've missed. If you need any help accessing the videos, give us a call at 800-672-7202 and look for the brand new video being posted right after this webinar. So with that, I'll go ahead and hand it over to Derek so that we can get started. Go ahead and take it away, Derek.
Thank you, Courtney. Hi, everyone. This is Derek Lape, Regional Marketing Director here with AIM. Today, I have Larry Moore, Regional VP of Individual Products with NGL. He's going to be going over some info on NGL's Essential LTC and kind of what separates it from other products out there. Good morning, Larry. How are you doing today?
I'm doing great. How are you?
Doing good. Thanks for asking. I'll let you take it away here and we'll kind of get rolling.
Okay, that sounds good. I'm just working on one technical issue. It doesn't look like my presentation is toggling back and forth, but we'll see what happens here. Anyway, getting started today, we're going to focus on just 4 things for you all to think about as it relates to National Guardian Life. AIM likes to keep it simple. They always have, and they've been very successful at that. So with that, that's where I'm going to go. So first of all, it looks like now my machine's catching up with me. Apologize for that. When we talk about the 4 things, I'm just going to back up one slide so you see where we're going to go. First of all, how this company represents the best of both worlds. I've been in the industry for 35 years and recognize that prior to coming on board, I looked at this company with a fine-tooth comb because I've been with a few others over the years, and they definitely do have what I would consider the best of both worlds that none of my competitors have. So I'll talk about that in a few moments. We also have some unique features in the Essential LTC product, particularly as it relates to couples. In fact, we're the only carrier that has some of these features that I'm going to share with you. We also have unique strategies to enhance coverage or leverage, if you want to use that term, for couples, again, that nobody else has at this point in time. I'll then touch on some other noteworthy features as well, because they are important considering that we're a traditional product, yet we have them. And then finally, our worksite capability as well. This is keeping us, frankly, very busy, steadily busier all the time. So let's get right down to it. When we talk about the best of both worlds, we probably all on this call know that our industry's been through some pretty crazy gyrations over the last 25 years. Major carriers with multiple ratings like MetLife, Prudential, John Hancock, gone from the industry. Great companies, but they left the industry. So, and there's a whole lot of reasons for that. Quite frankly, those are reasons that don't even impact our company, because while NGL is an old company, been around since 1909, great financial rating, great asset base for a small company, what's most important about us as it relates to LTC is that we literally don't have exposure that all of my competitors have to wrestle with. And what do I mean by that? We entered the marketplace in 2016. We have only 2 active claims on the books. And from a pricing standpoint, when you think about what the interest rate environment was like in 2016, with a near 0% treasury rate at the time, we're priced for that environment, along with being priced with the most, up-to-date actuarial assumptions as well. So with that being said, our financial posture is better than any of them, which means long-term stability is highly likely. And if you haven't checked the treasury or the prime lending rates these days, we're incredibly profitable as well. So with that, there's a natural question that any LTC expert would ask themselves, or any intelligent person would say, well, if you've only been in this since 2016, I can appreciate that the financials are beautiful. But do you guys understand what on earth you're doing as it relates to administering the product and underwriting and paying claims? And the answer is we absolutely do, because we are partnered with a third-party administrator called LifeCare. They've been doing this for over 30 years. They're paying claims on hundreds of millions of dollars of business right now, and they are our administrative arm. Then NGL wisely thought, let's get involved with an administrative partner so we don't have to recreate the wheel and start from scratch. So that's the best of both worlds. Awesome financials with a highly experienced partner that relates to administering and underwriting and paying claims on our business. Hey, Derek, are there any questions on that before I run through? Or are we looking good so far?
We're looking pretty good so far.
Okay, cool. So that's number one of the 4 reasons we're talking about. The second, I'm including number 2 and number 3 under one slide as you see this unfold. As it relates to couples, we're the only traditional carrier with a joint policy. It could feel like joint second to die on the life insurance world, but it really doesn't work that way. What you're looking at with a joint contract is each individual having their own discrete benefits. If insured one has a 4-year, $200 a day plan, insured 2 will have the same plan. One premium, basically 2 policies. Neither of these individuals can invade the benefits of each other's policies. They're their own discrete benefits. As a result, we're able to enjoy, I'll call it enjoy the competitive advantage on the pricing side of a uniquely priced joint model. Now, with that being said, all of our competitors have some form of shared care or a way that if one policyholder exhausts their benefits and still needs care, they could invade the benefits of their other spouse or partner and utilize nearly all of their benefits as well if necessary. A great feature, a great way to enhance leverage. We do it a little differently. In fact, quite frankly, I like the way we do it better because it's cleaner. We have the ability for about 28% more premium to add a third pool of benefits that either person can draw from, while at the same time protecting the integrity of their own benefits. This third policy, it's like a financial life raft, if you want to look at that, will match the benefits of either individual. So if insured 1 or 2, they both each have that 4-year, $200 a day plan, the value of that third policy will be worth the same, all right? And if you think about it, let's use that 4-year example. That means one individual conceivably could use up to 8 years of benefits, which is pretty impressive. So it's a very efficient, from a cost standpoint and from a risk standpoint, to enhance the purchasing power, if you will, of each other's policies with this third pool. Right now, we're the only ones that do this. And as a result, when you look at our pricing as it relates to couples, we're probably the most competitive in the marketplace. Did I hear a question out there by chance? Yes, I did.
We
So I'm going to go
clear of questions right now. But yeah, that's
Okay,
a really great point. I know as an agent myself, whenever I have a couple looking for long-term care traditional, I always look at you guys for that exact reason, that shared benefit, third pool.
Perfect. And yeah, when you just kind of look at the mechanics of it, if insured one uses all of his benefits in this example, he may very well use all or part of the pool. This person passes away, insured 2 inherits what remains. Now, what insured 2 can do if they want, they can save a little bit of premium and decide, do I keep this rider or do I drop this rider? So that person, the survivor, if you will, has the ability to make that decision as well. And when we look at the pricing standpoint of this thing, I'm going to go to the next slide. It puts us still in a very competitive position. This is a scenario with a 55-year-old couple. We're using a $200 a day benefit, $6,000 a month with my competitor, 3-year benefit period. My competitor has shared care. We have the third pool, as you see here. And when you look at what we pay for the leverage that you get, it's pretty attractive. If we start with the NGL side, for an annual premium for this couple, of $6,377, they have combined benefits of over $657,000, tax-free benefits. Look at my nearest competitor. They have the 3-year policies, each with shared care, which means one could invade the benefits of the other, but they have, for more premium, $7,500 in premiums, they only have $432,000 in benefits. So this is where we really play well. If you take us at the individual level, we're really not much more competitive than the others. We win some places, we lose some places. But as it relates to couples, especially shared care versus our third pool, we win most of the time, right? Going into other important features, just to touch base to kind of stretch out number 2 and 3, if you will. We have a lifetime option. We're the only traditional carrier with a lifetime option. We have flexible pay options. We have a 10-pay, which outside of the state of California is guaranteed, meaning that your 10-pay premiums will never go up, which is pretty nice, as well as a single pay option. We also have the ability to handle 1035 exchanges. Again, the only traditional carrier that has that capability. You have, of course, a third pool, which we talked about. You also have the ability to build our product to resemble an asset-based product at the level of live, quit, die, with the ability to add a return of premium rider. And then finally, we also have worksite capability, which I'll touch on next. The final point of the 4 points is that we have unique pricing structure that are not gender distinct. We call it unisex premiums. The program is available for people ages 40 to 79. However, on fully funded cases, we can negotiate with the home office to get down to age 35. Again, unisex pricing, which means doesn't matter if you're male or female, you're all paying the same rate. HR departments love that. As far as the streamlined group approval process, what does that mean? It has nothing to do with underwriting. It simply means that if you're looking to get your group approved and assigned a group number, it's a single page document, almost a rubber stamp, right? Our program's available in all states except New York now. We can handle employee populations, depending on the state, anywhere from 2 to 5 employees. It's based on the number of issued policies that would come through. So for instance, in the state of Washington, we need 5 issued cases to validate that group. Once the group is validated, you can then extend this unique and attractive pricing to immediate family members as well. And full comp is paid on this as well. And that kind of wraps me up for, the 4 points. So Derek, any questions or?
Take a look here. No, it looks like you went through that pretty clear and kind of concise and made sure everybody knew what you were talking about. So no one has any questions at this moment. So first I'd like to say thank you for taking the time to kind of explain some of those key differences. They're really important, especially in traditional long-term care. I know a lot of the agents appreciate that and kind of help separate you guys from the rest of the pack out there. As far as everybody else here on the webinar, if you do have any questions, or for those of you who are going to be watching this as a recording, if you have any questions, give us a call at 800-672-7202. Also, we will be reaching out to you individually just to see what questions you have. I want to say thank you to everybody and to have a great day.
Thank you, sir. Thanks for having me on.